Home loans in India have never been cheaper, but that wasn't always the case. In the next report, we break down what changed over the last 3 decades and why it matters to millions of Indians today. Take a look.
In the 1990s, borrowing money to buy a home in India was painful. Back then, credit was not easy to access and home loan rates crossed 12.5%. That is based on the country's largest bank, State Bank of India, or SBI. For most middle-class families, a home loan was a burden, not an opportunity. Then came India's 1991 economic reforms, a historic set of policy changes that dismantled the restrictive license Raj. Initiated by back-then Prime Minister P.V. Narasimha Rao and Finance Minister Manmohan Singh, these structural adjustments pulled India out of a severe balance of payments crisis through a model known as liberalization, privatization, and globalization. Soon, the Reserve Bank of India began cutting its key lending rate. Slowly and steadily, interest rates fell. By the 2000s, rates dropped to around 9 to 10%. The housing sector responded. New projects were launched and demand rose. The real shift came post-2016. RBI adopted an inflation targeting framework, rate cuts became more systematic, and monetary policy grew more transparent. COVID-19 accelerated the process. In 2020, RBI slashed rates to historic lows. EMIs fell. More Indians entered the property market. Today, SBI offers home loans starting at 7.25%. That's nearly half of what borrowers paid 3 decades ago. This shift reflects a fundamental change in India's lending culture. Banks are now more competitive. Digitalization has made the processing faster and credit access has widened. First-time home buyers are the biggest winners. Affordable EMIs mean more Indians can now own, not just rent. India's home loan story is a story of economic maturity, lower rates, greater access, and a growing middle class with real assets. Mrs. Bureau Report, WION World is One.